Hi everyone again, and welcome to session number 2 of our Path to Purpose webinar series. My name is Rebecca Jacobs. I am the Communications and Marketing Manager here at the Fair Finance Fund. And on behalf of the Fair Finance Fund, I'll just start by acknowledging that we are residing on Aboriginal land that has been inhabited by Indigenous peoples from the beginning. I and others from the fund work and live on the ancestral traditional territories of the Ojibwe, the Anishinaabe, and the Mississaugas of the New Credit, whose territory is covered by the Upper Canada Treaties. As settlers, we're very grateful for the opportunity to work and to be here, and we thank all the generations of people who, for thousands of years, have taken care of the land that nurtures and feeds us today. I'm joined by our host, Carson Beauregard, a farmer and business advisor with experience in economic development, social service provision, and food service, and with a strong passion for sustainable agriculture. Today's session is Master Bookkeeping and Tax Preparation, and Carson will cover effective bookkeeping practices to maximize tax benefits, keeping your financial documents organized so that you're ready for the tax season ahead, strategies for managing debt and mitigating financial risk, and we'll also touch on alternative financing options such as grants and community bonds.
Thank you so much, Rebecca. And a big thank you to everyone at the Fair Finance Fund for making this possible. Very much looking forward to today's session. And then for anyone who didn't attend last week's session, next week's will be with the owner of Wheelbarrow Farm in Sunderland, Ontario, Tony Neal, and he will share his story of 16 years of farming just outside the GTA, how he manages his financial systems, how he used community bonds to fund the purchase of an electric tractor, and how COVID changed his business model. And again, for those of us who didn't attend last week, a little bit more about my background. I've always been the idea of starting a business and running a business has always been appealing to me ever since my parents told me about it when I was like 6 years old. In high school, I began gardening, and that kind of sparked a love for market gardening, farming, and business. I went on to earn a degree in economic development with a focus on agriculture. I managed a number of agricultural products, including a food cooperative, Wheelbarrow Farm for a couple of years, and then my own farm. Then eventually transitioned to business consultations. And my full-time job now is managing a physiotherapy clinic, which is not at all, has nothing to do with anything we're going to talk about today, aside from, well, the financial practices. And so just a quick recap of last week's session. We talked about business structures, income and expenses, financial considerations regarding employees, and the profit and loss statement. So choosing the best business structure to minimize cost and risk and maximize profits and tax advantages. We went over the sole proprietorship, the corporation, and the cooperative or nonprofit models. Utilizing startup budgets, not just to start your business, but also to start new projects within your business, and maintaining detailed cash flow and production plans to stay profitable, stay organized, and make improvements as you go. Creating systems and standard operating procedures, specifically in regards to making sure your investment in an employee or employees actually brings value to your business. And we will talk some more about systems and standard operating procedures today. And then one of my favorite things regarding financial management is your profit and loss statement. This has been sort of like an unlock for me in the last couple of years. Actually creating that profit and loss statement at the end of every month. It's like your report card. It tells you how good your business is doing, how profitable, or, well, it'll show you your profits or your loss at the end of every month. And then if you do a detailed version every single month, it will make your bookkeeping and your accounting at the end of the year much easier. And so we will talk about that a little bit more today as well. So we will start with small business bookkeeping. This is the foundation of your year-end accounting. And so why is it important? So you want to have accurate financial records. This will ensure you're organized. It'll provide you a clear picture of your business's financial health. It'll help you stay compliant with the CRA, with other legal entities, help you avoid penalties, avoid audits, and other troublesome legal issues. It will help you make informed decisions, it'll provide critical data, and help you with long-term strategic planning. It will help with cash flow management, allow you to monitor and manage your cash flow effectively so you can prevent shortages. It'll help you with your year-end financial reporting. So, at the end of the year, tax season is a time of year that every business owner kind of dreads because there's a lot of work to do. But if you do your bookkeeping regularly throughout the year, it will make this much easier for you. Also, it can help easily provide data to stakeholders, investors, and lenders. And then budgeting and forecasting. Having all this data will help you create accurate budgets, financial forecasts, and help with business plans in the future. So why should you do it yourself? I highly recommend doing your own bookkeeping for the first few years of your business. It'll help you understand the business at a much deeper level, help you gain a comprehensive understanding of your financial status at all times. It'll help you make better decisions. You can reduce some costs when you're first starting up as well. You can avoid hiring a bookkeeper or an accountant to do your bookkeeping, so you can save some money during those crucial years. It'll help you develop a skill. This is a skill that nobody can take away from you once you've learned it. So this will enhance your overall business acumen, and it'll allow you to look at any business and sort of understand how things are working, especially if you're investing. Most people have some sort of long-term investment portfolio, and it is really nice to be able to pull a financial statement from a publicly traded company and sort of have an understanding of what it means. What the profits mean, the profit statements, what the balance sheets mean. So again, a skill no one can take away from you. It'll enable you to have full control over your finances. If you're having somebody else do your bookkeeping day to day, week to week, there are always opportunities for them to make mistakes, or to sort of act maliciously. God forbid that happens to anyone. It can allow you to proactively problem solve, identify and address financial issues, and prevent small problems from turning into big problems. It'll establish a solid financial foundation and can help you more easily scale your business or attract investors. And then it sort of demonstrates your commitment and involvement in the business, which again, if you have stakeholders or partners, will be reassuring to them. So, you're starting your bookkeeping journey, you've started your business. What system are you going to use to sort of track all your numbers? So when I started my business, I was concerned with invoicing. And so I wanted to make sure I wasn't spending hours every week creating invoices in Excel and sending them out. So I chose to go with QuickBooks for my accounting software. Now, a few years later, I don't send as many invoices. And I've learned a little bit more about how to use Excel effectively. So I've cut that cost out of my business and just started using Excel for all of my accounting. So pros and cons to each. And we will talk about those right now. So in terms of Excel/Numbers, Numbers is like the Excel for Mac. If anyone's using a Mac, you're probably familiar with Numbers. It's very similar. So pros, very cost effective. It could be free, or it could be, the cost could be associated with your yearly or monthly subscription to Microsoft. It's very customizable depending on your skill level. very flexible as well, again, depending on your skill level. Most people are somewhat familiar with it. You know, if you went to high school and used Excel a little bit or attended post-secondary education, you've probably used it a couple times to make some spreadsheets. Another big a big positive with Excel is there's no internet required once you've downloaded it on your computer. So some cons, it does require significant manual entry, although you can sort of mitigate that by downloading Excel files, you know, from your banking portal and just kind of copy and pasting them in. If you're not a skilled user, it does have somewhat limited features, but if you are an advanced user, it actually, I don't know that this one applies. It is very customizable again. As your business grows, it may hinder that growth. So scalability can be an issue. It can be time consuming, again, depending on your skill level, to use Excel or numbers. And then there is a bit of a lack of integration depending on which point of sale system you're using, or you know, your CRM system, client relationship management system. And then in terms of a dedicated accounting software like QuickBooks or Xero or Sage, some of the pros, it does automate a number of bookkeeping tasks, which can reduce errors. It does have a lot of advanced features. It makes it very easy to pull reports, makes it very easy to send invoices, to complete payroll, do tax calculations. It does easily integrate with your bank account, with payment processors, likely with your accountant. Your accountant can they sort of have their own portal to access your QuickBooks, so that can make it easy for them at the end of the year. They're fairly scalable. So as your business grows, it can grow with you. It will provide real-time financial data. So sort of back to that idea of creating that profit and loss every month, you can get a real-time profit and loss, you know, day to day, if you're using accounting software and kind of feeding it data in real time. Some of the cons, typically requires a subscription, but there are some that don't. But these subscriptions are generally fairly costly, depending on the size of your business. If your business is big enough, then the cost is sort of negligible compared to the benefit it brings. There is a learning curve. It will take some time to figure out the software, you know, how to pull reports, how to input data. Most often it is dependent on the internet, but there are some solutions where you can download and work off your computer, and then it will sync whenever you connect to the internet. And then overkill, it can be overkill if your business is very small and simple. So some things to consider. I would encourage everyone to sort of become familiar with Excel, but if you think your business requires it, then definitely try out some accounting software. So you've chosen either Excel or some sort of accounting software. You know, where do you start in terms of tracking your data? For me, receipts are number one. You know, if you're purchasing something in person, where are you putting that physical copy of the receipt? Because you do have to keep physical copies of all of your receipts for 6 years, according to the CRA. You know, some people that run businesses that I know, they don't do this, but I see that as a huge risk. If the CRA ever comes to you and says, hey, I want to audit, you know, this past year, I want to audit you going back 3 years, you're kind of screwed, and you're going to face some heavy penalties. So, and then once you have your physical receipt, how are you digitizing them, you know, to get them into either your accounting software or your Excel files? So in terms of systems for this, you need to decide when you get a receipt, where exactly are you going to put them? If you know, if you're in a store, I like to put my receipts in the exact same pocket every time. So when I come home at the end of the day, or when I go back to the office, I know, okay, pull out my receipts, you know, file them away. I have a spot in my truck where I put receipts also. So So kind of systematize this, pick a spot where you're going to put them every single time. And then where are you storing your copies of e-receipts? In our business now, we order quite a bit through Amazon. And so thankfully, Amazon stores those receipts for me. I don't necessarily have to download them and store them in a folder. But other online retailers that we purchase from, we do like to, if we get an email confirmation with a receipt, we'll create a folder in the email to file that email away, and then we'll also download a copy and put them in a dedicated folder in our OneDrive. So creating that system to store your receipts, to make sure you have them, very important. And then accounts payable. What sort of system do you have to make sure that you are paying your bills on time? Highly recommend any bills that you have that are reoccurring, set them up so they just automatically get paid, so you don't have to remember them at all. The best system is no system. So that's a fantastic way to do that. If you do have to manually pay them, set up reminders, calendar reminders, so that you don't have to actually remember. You're just going to be reminded and you're going to do it. So figuring out a system for your accounts payable. Next one is banking records. Last week, we talked about the idea of trying to minimize the different ways you purchase items. So I recommend either using a debit card as much as possible, for every transaction, or a credit card would be even better. That way you have a digital record of every single purchase. And then you can download that every month, use that to create your profit and loss statements. And then at the end of the year, when you need to send all your files to your accountant, these will already be available. Last year, I ran into a little issue where I was able to easily download all of my checking account statements. But then for whatever reason, the credit card company we use through the physiotherapy business, they only give you access to 4 months worth of credit card statements. And I hadn't been downloading them every single month. So they ended up charging me a fee to go back and pull those statements and send those to me. So if you're using a credit card in your business, make sure you go in every month and just download that statement in Excel format. That's going to make your life a lot easier, for creating your monthly P&L, and then also at the end of the year when you need to send all those records to your accountant. Just bear with me here. I think my mouse may have died. So invoicing and accounts receivable. How are you tracking your accounts receivable? If you're running a food or farming business, for an example, for a farming business, you may be delivering food to a restaurant every week, and you might have terms with them where they pay you every month. So how are you tracking when those payments are coming in after you sent the invoice? Because it's easy to lose track and not go back and reconcile when the money comes in from an invoice that you provided, to a customer 3 weeks prior. So setting up a system, again, reminders in your calendar to make sure you're tracking and then reconciling, the invoices you're sending out and then the e-transfers you're getting or the checks you're getting in the mail. And then the last one is creating that detailed monthly P&L. Again, this is your report card at the end of the month. And if you take the time to create a detailed P&L where you're taking your entire months of spending and organizing all of those receipts or all of those purchases into different categories, this will help you tremendously at the end of the year. Because if you don't do that monthly, then you're going to have to do every single purchase. You're going to have to categorize every single purchase you've made throughout the year at the end of the year, which is time you just don't want to be taking, especially in farming. You're going to be doing this in generally March, April, and that's when the farming season is just kind of starting up. So you don't want to be spending all that time doing this accounting and bookkeeping work that time of year. So some of the systems to consider creating in your business, in your restaurant or on your farm. So cash handling, how are you handling cash on a daily basis? Sales and expense input, how are you tracking this? How are you putting it, digitizing it? Bank reconciliations, document retention. Again, when you're buying things from an online retailer, how are you making sure you're saving those receipts? Backing up your data. This is something for everyone to consider, even if you're not running a business. Invoicing, accounts payable, payroll processing. These things you will become very familiar with because you're doing them very frequently. But then some other things that you're doing less frequently, like monitoring your budget, creating your P&L, making your tax payments monthly, and then filing your taxes yearly, planning your budgets, doing your cash flow projections. It's really nice to have written, documented procedures for these. So when that time comes back around, you're not having to remember how to do these things. You just refer to your document and go through the steps, just like following a recipe in the kitchen. And then again, setting up your digital calendar with time blocks. If you're doing things weekly, set up that time block so you have allocated time. You're not rushing to do it after hours. Set up those reminders so you don't have to remember these things. Your digital calendar just tells you to do them. And so we'll move on to some tax considerations. So we're going to cover deductions, input tax credits, in terms of farming, farm business registration number, and then the farm property class tax rate program, using donations and spoilage to minimize your tax burden. So in terms of maximizing deductions, make sure that you are taking every receipt that you can possibly justify and putting that into your list of expenses for your business. So that includes your home office, that includes your personal cell phone, your vehicle. Even if you aren't using these things 100% of the time for your business, generally you can use a portion of this expense and write that off as part of your business. Professional services, employment-related services, depreciation is a big one. If you're purchasing large pieces of equipment, that's called a capital cost allowance. Your accountant will want receipts for those, and you'll be able to depreciate that over a number of years. I believe there also is a program where, depending on the type of equipment in farming, you can kind of depreciate a large purchase over 1 year, which can be very helpful. If you make a lot of money that year, if you're very profitable. Health insurance premiums, educational expenses, travel and meals, marketing, advertising, and tax credits. That's another thing to talk to your accountant about. So input tax credits specifically, one of the benefits of running a business where you're selling products that HST is not attached to is that you can basically get input tax credits back from the government. So if you're running a regular business where you are collecting HST, these input tax credits will basically go against the HST that you're giving to the government every month. So the idea is here that 13% that you're spending in tax on every purchase, you can request that back from the government either quarterly or annually. So this is my favorite time of year. When I first started out, I would do this manually. I would take my big pile of receipts at the end of the year and I would go through them and input those into my QuickBooks. And if you sort of do the math, that ended up paying like hundreds of dollars an hour, because for every receipt, I'd be getting that 13% back. So again, this is actually the list from the CRA's website. So business startup costs, business use of home expenses, delivery freight charges, fuel costs, legal and accounting, etc. Make sure you're keeping all of these things. And talk to your accountant. Some things that people may not consider is if you have a home office, obviously you have a bathroom in your home, you have a kitchen in your home. Well, all of a sudden the toilet paper in your bathroom became a business expense because it's for your business bathroom. The dish soap in the kitchen became a business expense as well. So talk to your accountant. You want to absolutely maximize the amount of deductions that you can use in your business. So next, if you're running a farm, the farm business registration number is a fantastic thing to have. In Ontario, if you're a farm and you gross over $7,000, you're sort of eligible and I guess required by law to register your farm with AgriCorp. And they will give you your farm business registration number, which will allow you to participate in the farm property class tax rate program, which will qualify you to pay 25% of the municipal tax rate on your agricultural land. So that could be a significant tax savings every year. It can help you be eligible for different government programs. You'll be eligible for a membership to some of the farmer unions. And then you'll also be eligible for discounts through insurance. You see the farm plate picture at the top of the screen. If you are farming, make sure you're telling your insurance company that you are a farm and you would like that discounted rate for your vehicle, your home, etc. And then in terms of donations and spoilage, if you're a restaurant or a farm and you end up having food that you've produced and you think you're not going to sell it, then it may spoil. Reach out to a food bank, donate that food. They can very likely give you a tax receipt that you can claim against your expenses. This is a positive for a number of reasons. It'll help reduce waste. It supports the community, fosters positive relationships, and again, can offer those tax benefits. Sort of a little side note here. This is sort of a strategy for increasing your sales. It's sort of a unique sales opportunity and also helping the community. And this is not my idea. This came from the food cooperative I worked for right after high school, or sorry, university. So if you're a farm, let's say you're a vegetable producer and you have a friend that's a meat producer and a dairy producer and say a honey producer, the four of you can get together and approach a food bank and say, hey, we want to do a donation program where community members donate to a specific farm with the goal that the money donated through the food bank to one of those specific food producers gets spent on the food they produce. But then the producer of that food kind of stores the food for the food bank until they're ready to use it. So this is fantastic in a number of ways. This kind of flows the money through multiple organizations. It sort of touches the food bank and then it touches the food producer. And most food banks don't have kind of large cold storage capacity, which generally, if you're a restaurant or a farm, you do. So this can be sort of a unique sales opportunity that will help you sort of support the community and increase your sales. So little side note there. And then spoilage. This is something that you can sometimes take advantage of. If you have a bunch of product that has gone off, let's say your cold storage went down, the compressor on your walk-in cooler went down, there is potential to claim that as a loss. Not always, but that's something you want to talk to your accountant about. So you're sort of ready to capitalize on that if it ever does happen. So you've come to tax season. What do you want to start with? Number one, reach out to your accountant. Before it's too late. Generally, you want to do this after you've finished your season. So in January, reach out to your accountant, ask, hey, what do I need to prepare for you so that I'm filing on time? So number one, make sure you have all of your receipts. And if you, I heard this interesting kind of anecdote on a podcast. If you want to get really crazy, you can actually digitize every receipt and send that to the CRA with your tax return. Most people do not do this because it's a decent amount of work, or it can be, but this potentially can give you some leverage if the CRA comes back to you and says, "Hey, we want to audit you." Or maybe we have a penalty because we found something that you've done, by accident that's inappropriate. Well, you can go back to them and say, "Hey, you already have all my receipts, so I don't have to do any further work. And, maybe I want a bit of a discount on the penalty you're going to give to me. And because I've made it so easy for you to complete this audit, you have a little bit of leverage." So, something to consider. Um, so the next thing, so have all your receipts, filed away, ready to go. The next thing you want to have is your summary of income. So if all the money is coming into your bank account, you want to download those statements, have those ready to go in one spreadsheet that you can, send to your accountant. The next thing is expenses. Same thing, every single expense in a spreadsheet, categorized, ready to go. You want to actually download your bank and credit card statements and send those sort of separately in PDF or Excel format. Insurance documents, any new vehicle purchases, loans or investment. And there's probably a number of other things depending on your business, your type of business or the size of your business that they're going to ask for. So that sort of brings us to the end of tax considerations. We're going to talk a little bit about creative financing. So if you're just starting your business and you have kind of limited access to funds, you're very financially responsible and you have very good credit, interest-free balance transfer cards are an option. Now, this is a little bit risky, but I know some farmers who have kind of utilized this technique and it has been helpful. So what you can do is apply for an interest-free balance transfer credit card. You purchase, let's say you have a piece of equipment that you want to purchase that's going to dramatically improve efficiency on your farm and in your restaurant and really create extra cash flow immediately. So you can purchase this piece of equipment, on a separate credit card or through a line of credit, and then transfer the balance over to this interest-free credit card, which will give you, 6 to 12 months to pay off that purchase interest-free. So again, you only want to do this if you have a solid plan to pay off that principal within the given term. Because if you don't pay that off within the given term, there's large fees associated with it. So a bit of a creative option there. Using personal lines of credit is number two. Sometimes when you're just starting out your business, you don't have multiple years of financial data to give to a lender, so they will just not give you a business line of credit. There's no way they can do it. So you can take out a personal line of credit and use that to fund your business. This is something I did when I started my farming business. I created a cash flow plan to pay that line of credit off over a period of 5 years, and I did that successfully. So that worked out great. Grants and subsidies, they can be a fantastic way to, infuse your business with a little bit of extra cash. That being said, some grants do take significant time to complete the applications. So consider that if you're kind of strapped for time, maybe you don't want to go down this path. But one great portal that I mentioned in last week's session is the ISED Business Benefits Finder. I think Rebecca sent that out to everyone on the list that's attending today, or at least attended last week. We can send that out again if there's a few people who didn't get that. You can also just Google ISED Business Benefits Finder and it will pop up as the first search. GrantStation is another one we briefly touched on last week. I believe this is a paid subscription service. it's fairly cheap. So if this is something you're going to be spending a lot of time on, applying for grants, something to consider there. And then I think something I didn't mention last week was reaching out to your local small business enterprise center. Um, Most municipalities have a publicly funded organization where small business owners or large business owners can go for assistance with financials, with business planning, for connections with industry professionals, and grant applications. So reach out to your local SBEC. They will be more than happy to help you free of charge. Angel investors and venture capital. This is something to consider when your business is a little bit more established. You have years of financial documents, and you're profitable. In the North, we have an organization called Northern Ontario Angels. So if you're in the North, you can reach out to them if you're looking for additional investment, and they will generally only partner you, sort of if you're eligible, they will partner you with a candidate that has funds to invest, but also has expertise in your business. So you're not just getting money, you're also getting the expertise of that very successful entrepreneur. And then there's likely a number of different angel investor or venture capital groups in Southern Ontario. And then the last one is community bonds and crowdfunding. I would say community bonds are sort of a type of crowdfunding. You're likely familiar with organizations or businesses like Kickstarter or GoFundMe, but you can actually sort of, if you have a network of customers or stakeholders, you can create bonds and sell those to your customers or stakeholders and promise a return over a certain period of time. So next week, Tony's going to talk about that a little bit more because he actually went through that process, sold community bonds to purchase that electric tractor. So those are the creative financing options I have for you today. And so we've reached the end of the presentation. Some of the key takeaways: in the first few years of your business, do your own bookkeeping. Create your systems, stay consistent, stay organized with your financial processes. Do your best to maximize expenses so you can minimize your tax burden. And then if you need to, consider utilizing unconventional financing methods. And so that is it for today. If you guys have any questions, I would be happy to take them.
Thank you so much, Carson. It was really, really interesting to learn about and definitely informative for me. For folks, you can feel free to drop any questions you have in the chat and we can share them here. You can send them directly to Carson or I, or feel free to also just unmute yourself and ask Carson anything you'd like about today's topics. And I can maybe start one here. One came in through the chat. What are the most common financial mistakes that a small farm business might make, and how could they be avoided?
I think just not tracking everything, not having those systems in place, those documented processes, because that's just really going to set you back at the end of the year. If you're not creating the profit and loss at the end of every month, you just kind of don't know how your business is doing. If you're not creating budgets and cash flow projections, I think that will also set you back. So I would say those are some of the most common mistakes.
I'm curious myself too. Do you have any resources around how someone starting up a business or even as a freelancer, finding out what expenses can and cannot be claimed as a tax deduction?
Yeah, the CRA's website, if you Google, eligible tax deduction CRA, you'll be able to pull up a list. And then talking to your accountant, like if you're unsure, I recommend, a lot of small business owners don't get accountants. Especially if you're someone who's done your own taxes, your own personal taxes for a few years, you may think it's not in your best interest or it's not cost effective to go reach out to an accountant. I highly recommend it. You know, they're professionals that are dealing with this every single day. They're going to catch things that you miss. So again, just doing a bit of research on the CRA and then also reaching out to an accountant, even if it's just for a one-time consultation, very likely worth the money.
You feel free. I know sometimes it can be more helpful to sit and digest all the information that was presented today first, and then maybe come back with some questions later on. You can feel free to reach out to us, to Carson and I. You can send us an email and we'll help you out with any additional information or resources that might be helpful for you. And as a little reminder too, next week, same time, same place, is our third and final session of this webinar series. And as Carson mentioned at the beginning and at the end there, we will be joined by Tony Neal, who's the founder of Wheelbarrow Farms, or co-founder of Wheelbarrow Farms. And if anyone here knows Tony, he's a fantastic presenter as well. So charismatic. So it's going to be a really great session, I know, and he'll be sharing some really insightful information about how he has worked pretty creatively to help finance operations at Wheelbarrow. And so if you haven't already signed up for that, I will be sending out the link to do so along with this webinar recording